This is a good question. How do I set my stop loss and my take profit? Um, your stop loss is going to be. We've all got trading systems that we're looking at, okay? And our stop loss is going to be dictated by our trading system. And if and use your eyes too. I like to put my stop losses over swing highs and underneath swing lows, and these create really good points of support and resistance. Okay, and um, I'll take my profits according to the system rules, and I'll manage my trade according to the system rules. And that's my vehicle of how I'm maneuvering the market. Risk reward ratio is going to be, that's also going to be dictated by whatever system you're using. And there's trend following systems where you can get 2, 3, 4 to 1. There are other systems out there that will look for a 1-to-1 target. But they're heavy on the trade management. They might have a bigger initial stop. The target might be a little smaller than the stop loss, but it's that system would have heavy trade management rules. And you move to say if you're looking for 30 pips or 40 pips, and then your stop is 80 pips. What they're going to have you do is you're going to break even after about 20 pips. Okay, and so that's going to reduce your stop, and then you're going to you're going to be targeting a smaller amount, but you're going to be managing it properly as soon as possible. And that's the name of the game. You want to manage that sucker as soon as possible to make sure that you're not in any danger of losing a trade, or losing either losing a trade or losing money on the trade, because you let it run too far. So here we've got another one. We've got the market going sideways down here. It's just bouncing around, and then all of a sudden it gets a wild hair, and it's whatever, and spikes up and just shoots way up. Okay, and then it goes sideways. Okay, now over here is a little bitty gap. Now this is a great example of off market hours. Okay, this is the Aussie dollar on the 15-minute chart, and this gap here is this is the close on Friday, and this is the open on Sunday. Okay, and what happened here was there something happened, and people got excited and decided to buy the Aussie. Okay, and that's what they did. They bought right here, and bam, went up, and they said, okay, I've made my money. I'm done for the week, and it just kind of drifted along and went sideways. Okay. Now this was a couple hours leading up to the Friday close, and that's something else that you're going to want to avoid when you're doing a Friday close, or when you're close to the close on Friday. We want to stay away from that. And here we've got another good example of how the market's moving, and say we got late to the party on this. Okay, the market was moving up, it came up, okay, and then pulled back real nice. And we can draw horizontal support here, or resistance here. We can draw some support down here at the bottom, and when we get a break, it broke right over around in here. When we get a break, it goes up a little bit, comes back to retest, and then it shoots right up. Okay, well our entry was somewhere right around in this area. Okay, these were decision bars right here. Okay, people were making a lot of decisions right here. And when it shot back up, or when it shot up, everybody had gotten in right around down in this area. And the market fell off. It shot up, everybody got scared, got out, and then it pulled back. And a lot of times, if this big candle is going to continue, you'll see a pullback like this before it continues. And if you get in, if you open up the charts and you see it about halfway up this candle, wait. Okay? Wait for a better entry. Wait for an appropriate entry, because right here you can draw a killer trend line. Okay, you get the break right across here. Stop loss is under here, and it takes off. Okay, that would have been a great trade. So that's really something that you're going to want to look for. You're going to want to be able to go back in history and look for things and make it make sense. If you can't make sense of it, then don't trade it. and understand how the market moves and study it. And I tell people, take screenshots of awesome trades, okay, and keep a file, keep a folder on your computer of awesome trade setups, and keep a folder of crummy trade setups. Name it whatever you want. Just make a distinction between the good ones and the bad ones, and then every time you get a setup, pull out the good ones and look through it. And if you can't find it on any of the good ones, look through the bad ones. And if you can find it on one of the bad ones, then you're going to want to skip that trade. Okay, that's going to make you a better trader, and it's going to show you how to react and what to look for. Now, this is an interesting scenario right here. I've seen this happen. Okay, I've seen this exact same thing happen right here in real time. I was watching the market. It was falling, and all of a sudden, bam! It turns around right here, and then bam! And either people made a whole bunch of money right here, or a bunch of stops got taken out. Okay, and once it did this, it had another big candle right here. Okay, and it shot up and then came right back down. This is not a market that you want to mess with right here. And this was a news release. And this is something that you're going to want to stay away from, because this kind of stuff can happen. The market can be falling real nice. It look real pretty, real smooth, and then bam, and then it just kind of continues on its way down, and it doesn't give you a second thought. Okay, you want to watch out for that kind of stuff. Now here's the bottom of a move right here, and the market doesn't typically turn on a dime, but in this case, it does, and it can. Okay, we've got a move along here. It comes up, and then it crashes right down, and then it smacks the bottom right here, and then just turns around and goes right back in the other direction. Okay, and if you'd have gotten in right here, there is no way that you would have made money on this trade. And when I first started trading, and I'd see moves like these, I'd get in, and I couldn't figure out for the life of me why I was why I was selling all the time at the bottom of a move. Okay, and I could not figure it out. And this is exactly why. I wasn't patient. I wasn't. I didn't do my analysis. I didn't check to see where support and resistance was at on the higher time frames. I wasn't paying attention. Here's another one. This was a big fat one, okay? And this, there's just nothing that you can do with this. This was such a big candle that there was no retracement, really, and it just went sideways. And if you guys are seeing this, if you guys are opening up your charts and you're seeing this kind of stuff, wait. Okay, that's the best thing that you can do is wait. Does everybody understand what I'm saying? Is everybody with me so far? Awesome. Good deal. Here's an interesting question. Dahlia, you're asking, can I rely only on support and resistance of the 15-minute chart? You can. If you know how to trade that and you know, where things are, then that's fine. I prefer to have a broader view of the market, and I like seeing where things are at on a higher time frames, and working my way down to my trading time frame, because a lot of times what you can see on a 15-minute chart, the market could be in a downtrend on the 15-minute chart, but in reality on the 4-hour or even on the daily, it's just a retracement to a support area, and it bounces. Okay, so essentially what you're going to be doing, if you're not taking a look at those higher time frames, it's going to get to a certain point on the 15-minute chart where it can't go any lower, and you're going to be selling at the bottom of a market. Okay, you're going to be selling at the bottom of the daily chart. at the bottom of that retracement. And so you're going to want to be aware of that, and that will save you. That will save you a lot of headaches and a lot of pips. Does that make sense? Hopefully I answered that in a clear fashion. I like looking at the higher time frames for my support and resistance and drawing trend lines and whatnot. So that's what I do. Now we're running out of time here, and I've got a bunch more examples. But what I want to do is I want to take into consideration a few more charts maybe, and then I want to field a couple more questions, and then we're going to have to wrap up. What about pivot points? Pivot points are fun. They provide really good areas of support and resistance. If you're on the 4-hour charts, you'll probably want to look at the weekly support or weekly pivot points, because the market will tend to move between those points. If you're on anything lower than that, you can use the daily pivot points, which will give you support and resistance for that day. And those are really good. They're very predictive, actually. And when you load them up on your charts, you'll be really shocked at how often price bounces off of one of those points every day, and you'll start seeing really solid trade setups off of those points. And so those are really fun to watch. Now, here's an interesting scenario. We have something kind of interesting here. We've got price moving up here. We got this big long candle, okay, and what we have as well is what forms is a head and shoulders pattern. Let's see if I get my mouse back. There we go. We've got the left shoulder here, and it comes down and it comes up and makes a peak. It comes up and makes a peak right here, and then it falls away, and then comes up and makes another peak right here, and then continues to fall away. That's a head and shoulders pattern. We've got the shoulder here, left shoulder here, we've got the head here, and then we've got the right shoulder here, and down along here would be the neckline. And once we start moving away from that, I'd probably put my neckline right around in here. So once that broke, I'd be looking to go short, put my stop over here, and then watch it fall off. Okay, and I place my targets accordingly. And there's a whole theory around targets with the head and shoulders, and what a lot of people use for targets. You can target support resistance. You can target the width of from the top of the head down to the bottom of the neckline. You can use that as your pip target and put your stop over the shoulder here. And that's what a lot of people do. They'll target support and resistance. They'll target the bottom of where it started, or they'll target the distance from the head to the neckline. So that's an interesting setup right here, and that's something that you can watch for. You can take that to your charts. Every time you see a big bar like this, keep watching this and watch what happens next. Okay, and if you're seeing something like this with a failure, you come back down here and it tries to go up and it just fails. You got a head and shoulders pattern, and then you can trade that. And that's something, rather than trying to get in at the top of a move like this right here. You might have made a little bit of money, but then it turned around and went against you, and that's something that you can watch for. This is I'd like a little bit more explanation on this question, Dahlia. Can I close or take my trade when I see a pin bar? Pin bars are great for reversals, and you have to know how to trade them. Like, this is a nice little pin bar right here. Okay, it's what I'd want to see on this is a longer wick up here, and a shorter wick down on the bottom. And what you can do is you can place a stop or a pending order just below that, and wait for that to trigger, and place your stop just above the high of the pin bar. That's a very valid entry method, and it works really well when you combine it with a moving average for direction, and you can really make some money that way. That's a very simple, easy, and effective method to use, and it works really well on the higher time frames like the 4-hour and the daily. So that's definitely something that you can think about doing. What I'd like to do now is skip to the end. We've got actually a pretty big announcement to make. Let me get to... Here we go. We have a really big announcement to make. What we're going to be doing is we're looking for some feedback here. Okay, and we're looking for some comments or a review of this webinar. We want to know what you guys think. We want to help you guys out. We want to help you guys. That's what we're here for. That's what I'm here for. And I'm here to help you guys learn, and I want you guys to ask me questions. So what we're going to do is we're going to take 2 of the best comments here. And everybody that's attended is free to do this. Okay? And make a comment on either my Facebook page, my blog, or on my Twitter account. Okay? And we're going to take 2 of the best comments, and we're going to give those 2 people a free 1-hour coaching session. I'm going to give you guys a free 1-hour coaching session to ask me anything that you want, and I'm going to do everything in my power in that 1 hour to make you a better trader. I want that. I want to see you guys succeed, and that's what I'm here for. That's what I want to do. So I just want to thank you guys for coming. If you guys, like I said, if you guys have any questions whatsoever, feel free to make a post on any one of these sites, on my Facebook account, on my blog, or on my Twitter account. So I just want to thank you guys for coming. Have I answered? I've tried to answer as much as I can. Is there any more pressing questions that you guys have for me? Not a problem, Rob. And thank you, Mike. Thanks for coming out, guys. It's been a lot of fun. Not a problem. Well, you guys have a great afternoon, and I will see you next time. Take care, guys.